XRP.
XRP, you got it,
Yeah, yeah.
which is making a lot of waves in the world of digital assets.
Yeah.
And we got a really interesting think piece you sent over titled, Why Are People Excited About XRP? It's from Griffin Hill Ltd.
Yes.
Now, what I found interesting is this piece is written by Frederick Griffin.
Oh, wow.
Do you recognize that name?
Yeah, he wrote Bitcoin, crypto, blockchain, making sense of it in small bites, right?
That's the one. So he's got a real knack for explaining these complicated crypto concepts
Mm-hmm.
in a way that's really easy to understand. So I was really intrigued to see his take on, what's driving all this buzz around XRP.
Yeah, and Griffin really does have a way of kind of cutting through the jargon and getting to the core of things. So I think his perspective on what's fueling this excitement around XRP should be really insightful.
For sure. So just to set the stage for anyone who might be a little newer to the digital asset space,
Hmm.
XRP is essentially a digital asset and a payment protocol. Ripple Labs created it back in 2012. And what Griffin's piece really highlights is that its main goal is to make sending money across borders incredibly fast and a lot cheaper,
Right.
which, that in itself is a huge...
Yeah, that's a big deal,
Yeah.
especially in today's world.
Absolutely. But here's a key difference that he points out. Unlike Bitcoin, which, was envisioned as this kind of decentralized alternative to the traditional financial system,
Right.
XRP is actually designed to work with it.
Interesting.
It's really targeting banks and payment providers.
Okay, so it's more about collaborating with the existing infrastructure rather than replacing it completely.
Yeah, exactly.
Which obviously has, both its proponents and those who have some reservations about that approach.
For sure. And then just to quickly touch upon it, we should mention Ripple Labs and the XRP ledger, XRPL. So Ripple Labs is the company that kind of started it all,
Okay.
but the XRPL itself is an open source, decentralized blockchain. So while it operates independently, Ripple's still a major contributor to its development and adoption. So, drawing from Frederick Griffin's analysis, our mission today is to really understand why there's so much excitement around XRP, see how it's actually being used in the real world, and then we'll also look at some of the, the critical viewpoints surrounding it.
Yeah, I think that's a great approach. We're essentially trying to grasp that underlying value proposition that Griffin's highlighting as the driving force behind this enthusiasm.
Absolutely.
Yeah.
Okay, so let's jump right into that core use case. What's the main function that XRP is actually built to perform?
So basically, XRP acts as a bridge currency for international payments. Think of it like a digital translator for money, instantly converting one fiat currency into another. And what's fascinating, and something that Griffin really emphasizes, is the direct benefit this offers to financial institutions. You see, traditional cross-border payments can be really slow and expensive, involving all these intermediary banks, and XRP provides a potential solution to streamline that whole process.
Right, because it's cutting out all those extra steps and fees.
Ex-
And in his piece, Griffin makes a point of highlighting those benefits. Real-time settlement, much lower fees, and increasingly important these days, much lower energy consumption compared to, for example, Bitcoin
Yes.
or even Ethereum.
Precisely. Those traditional systems, they often involve multiple correspondent banks.
Yeah.
And it can take days for the whole thing to settle, with fees piling up at every stage. So what RippleNet does is it leverages XRP to streamline this whole process. For banks, for remittance services, it just makes international transfers so much faster and cheaper.
So I'm seeing a lot of efficiency gains here.
Oh, absolutely.
Now, within RippleNet, there's this on-demand liquidity service, or ODL.
Hmm.
This sounds like a real game changer.
It is, yeah.
How does XRP play into this instant liquidity?
So ODL is really a key innovation here. Instead of financial institutions having to keep funds in different foreign currencies just sitting in accounts around the world, those are called Nostro accounts, they can use XRP to get instant liquidity whenever they need it. So imagine, let's say a U.S. bank wants to send dollars to a bank in Mexico. Using ODL, they can just buy XRP with those USD, then instantly sell that XRP on an exchange for Mexican pesos, and those pesos are delivered to the recipient bank. And the whole thing happens in seconds.
Wow.
It significantly reduces the capital banks need to keep tied up in those pre-funded accounts.
So it's like freeing up money that would otherwise be stuck.
Exactly, exactly. And of course, it drastically lowers transaction costs.
Okay, so that really paints a clear picture of how much more efficient things can become. So if XRP does see wider adoption for this, who benefits the most?
Well, as Griffin lays it out in his analysis, first and foremost, the banks and financial institutions themselves gain a lot. Those lower fees, the faster settlement times for their international transactions, that's a big win for them.
Yeah, no, efficiency and cost reduction are always huge in finance. What about beyond the institutions themselves? Who else stands to benefit?
Then you have remittance services. These are the companies that help people send money internationally.
Right.
For them, XRP could mean significantly cheaper transactions. And those savings can then be passed on to the individuals sending the money, often across very long distances.
Which is huge, especially when you think about the fees associated with some of these services.
Oh, yeah.
So that has a very direct impact on the end users, particularly people in developing nations who rely heavily on these remittances.
Absolutely. Every dollar saved on those fees means more money actually reaches the families who need it.
Right.
And faster access to those funds can be crucial in situations where they're needed immediately.
Yeah, for sure. And naturally, as more people use the XRP network and the digital asset itself, that could increase demand, which would benefit Ripple Labs and XRP holders, right?
Potentially, yes.
Yeah.
Though, as with any exciting development, there are potential drawbacks and competition to consider. Griffin's piece does touch upon some of the more critical perspectives around XRP.
Right, because it can't all be sunshine and roses.
Of course not.
What are some of those challenges that Griffin points out?
One of the biggest ones is the ongoing legal situation, especially that SEC lawsuit. It's created a lot of uncertainty and contributed to price volatility.
Yeah, that's been a big question mark hanging over XRP for a while now. What's the core issue there?
The fundamental question is whether XRP should be classified as a security.
Okay.
That has major implications for how it's regulated and adopted, especially in the U.S.
Right.
And then there's the recurring concern about centralization with XRP.
Okay, so this gets at the whole decentralization aspect that's so central to the idea of cryptocurrencies in general.
Exactly, because Ripple Labs initially held a huge chunk of the total XRP supply and still plays a significant role in the network's development and promotion. There are critics who say it's not as decentralized as, say, Bitcoin.
Interesting.
And this concentration of influence does worry some people.
Yeah, I can see why that would be a concern. Now, XRP isn't the only player aiming to make cross-border payments faster and cheaper, right? What are some of the competitors that it's up against?
Oh, there are definitely others in the field. Griffin's piece mentions a few key ones. Stellar, XLM, is one to watch.
Okay.
Especially considering it was co-founded by Jed McCaleb,
Right.
who also helped start Ripple.
Wow.
And Stellar has a similar focus on cross-border payments.
Okay.
Then there's Swift GPI. That's basically the upgraded version of the existing SWIFT network, the one a lot of global banks use now for international payments.
So that's more of a traditional player trying to adapt.
Exactly. And then we can't forget about the whole world of DeFi, decentralized finance, which is exploring all sorts of new ways to handle settlements using blockchain technology.
So XRP's got its work cut out for it.
Yeah, the competition's definitely heating up.
It's interesting, though, because Griffin's piece also highlights the community and ecosystem that's grown around XRP. It seems like they're pretty passionate about it.
Oh, yeah. The XRP Army, as they call themselves, they're a very active and vocal bunch online. They're on Reddit, Twitter, YouTube, everywhere, really, showing strong support for the project. And it's not just the community. The XRP ledger itself is getting more capable. It supports NFTs now, non-fungible tokens, and even smart contracts through things like hooks and sidechains, so its potential uses are expanding beyond just payments.
So it's evolving and growing beyond its initial focus. That's fascinating. And Griffin also mentioned some pretty big partnerships that RippleNet has formed.
Yeah, several established financial institutions have tried out or even fully adopted RippleNet for their international transfers.
Okay.
We're talking names like Santander, American Express, even Tranglo.
Those are some big names in finance.
For sure. These partnerships really add credibility and show that there's real interest from major players in the industry. And on top of that, you have the XRPL Foundation, which is really pushing for decentralized governance and the continued development of the XRP ledger.
Okay, so let's dig into the technical structure a bit, the tokenomics and governance of XRP.
Right.
What does Griffin highlight in his piece about this side of things?
So with XRP, the total supply is fixed at 100 billion tokens. All of them were created right at the start, no mining like with Bitcoin. As of early 2025, about 55 billion XRP are in circulation, Ripple Labs initially held a big chunk of that, something like 80 billion, and they've been releasing parts of it gradually through these escrow systems.
Okay, so the escrow system is like a controlled release mechanism.
Exactly. Back in 2017, they put 55 billion XRP into these special escrow accounts. Each account has a contract that limits how much can be released each month, no more than 1 billion XRP. And any XRP that's released but not sold often goes right back into the escrow queue, effectively extending the lockup period. So it's designed to create more predictability in the market.
It makes sense. Now, when it comes to decision-making on the XRP ledger, how does that work? Who gets to decide on changes and stuff?
Well, unlike some blockchain projects that have those formal DAOs, decentralized autonomous organizations, XRP relies more on community involvement for governance. Anyone can run a validator node, which helps verify transactions on the ledger. The community can also propose and contribute to open source changes to the protocol. But the core consensus mechanism that determines which transactions are valid is the unique node list, or UNL.
Okay, the UNL, Griffin's piece really dives into that. He pulls out a lot from the white paper, specifically about this consensus mechanism.
Yeah, the original XRP Ledger white paper goes into great detail about the technical architecture and really emphasizes that UNL consensus mechanism. Griffin draws an interesting comparison with proof of work, which is what Bitcoin uses. With proof of work, miners use a lot of computing power to solve these complex puzzles to validate transactions.
Right, and we all know about the energy consumption issues that come with Bitcoin mining.
Exactly. So with UNL, instead of that competitive mining process, you have a set of pre-approved validator nodes that agree on the validity of transactions. While technically anyone can choose their own list of trusted validators, Ripple does provide a recommended list of these nodes. And that reliance on a pre-approved list, that's where some of those centralization concerns come in.
Right, because it's not as open and permissionless as some people might like.
Yeah, exactly.
But the trade-off is that it's super fast and efficient.
Oh, for sure. Because it's based on agreement between these trusted nodes rather than heavy computation, consensus happens really quickly, usually within 3 to 5 seconds. That makes it one of the fastest blockchain settlement systems out there. And because there's no energy-intensive mining, the environmental impact is way lower.
So as Griffin points out, it's a trade-off between speed and energy efficiency on the one hand, and maybe a slightly less open system compared to something like Bitcoin on the other.
Right, it's a balance for sure.
Now, when a transaction actually happens on the XRP ledger, how does that settlement process work, according to the white paper?
So the white paper really emphasizes 2 key things: finality and low latency. Finality means that once a transaction is validated by that UNL consensus, it's irreversible. That's really important for financial applications where you need absolute certainty.
It makes sense.
And latency, meaning the time it takes for a transaction to settle, that's that near instant 3 to 5 seconds we were just talking about.
Wow.
The ledger uses a specific way of ordering transactions and these cryptographic hash-based signatures to make sure the transaction history is accurate and to prevent fraud. It's all designed for really fast value transfer, kind of like how data zips across the internet.
That's a good analogy. And the white paper also talks about the overall design of the ledger itself, right?
Yes, it does. And this is where it differs from Bitcoin's approach. Bitcoin uses this unspent transaction output model, UTXO.
Right.
That's where transactions involve moving around these discrete coins. The XRP ledger uses something called a stateful account model. This is more like a traditional bank ledger where each account has a balance, a sequence number to track transactions, and a full transaction history.
Interesting.
And what's really cool is that it has several built-in features, things like multi-signature wallets for extra security, escrow features for making payments that have conditions attached, and even time-locked transactions that automatically execute at a specific time. On a lot of other blockchains, you'd need complicated smart contracts to do these things.
So it sounds like they were really thinking about financial use cases when they designed this.
Oh, absolutely.
Okay.
And the white paper also gets into some really innovative things that are built directly into the ledger. Things like a decentralized exchange, a DEX, that's been part of the system from the very beginning.
Okay.
And this pathfinding algorithm, which helps users find the most efficient way to exchange currencies across all the different liquidity pools on the DEX. This all means XRP is highly specialized for financial grade transfers, so developers don't need to write a bunch of custom code.
So it's ready to go, essentially. Now, scalability is always a big concern for any blockchain that wants to be widely adopted. What does the white paper say about the XRP ledger's ability to handle tons of transactions?
Well, according to the white paper, it can handle 1,500 transactions per second, or TPS, with the potential to scale up to 65,000 TPS through future upgrades like sharding or sidechains. And the
Okay.
transaction fees are super low, like fractions of a cent. That helps prevent people from spamming the network without making it expensive for legitimate users.
Smart.
Griffin puts those numbers in context, mentioning that Bitcoin can only do about 7 TPS, Ethereum, before its big upgrade, could do about 30 TPS, and Visa's theoretical maximum is around 24,000 TPS.
Wow, that's quite a difference. So those comparisons really highlight just how scalable XRP could potentially be.
Yeah.
But Griffin's piece also raises some good questions about those throughput claims, doesn't it?
It does. It asks if those capabilities have really been tested in the real world. You know, has the network actually shown it can handle huge spikes in transaction volume without slowing down or having problems? Griffin's analysis suggests that XRP is already built to handle institutional level transaction volumes, which is pretty impressive.
Yeah, that's a bold claim. Now, going back to the token distribution, we talked earlier about how Ripple initially held a large portion of the XRP. Griffin's piece points out that the original white paper wasn't completely transparent about this right from the start.
That's true. The original white paper did a great job explaining the technical details of the ledger and the consensus mechanism, but there wasn't really a section dedicated to economics of the XRP token, or a clear breakdown of how those 100 billion XRP would be distributed.
Interesting.
The specifics about Ripple Labs having roughly 80 billion XRP initially, their release plans, and the later implementation of that escrow system, those details came out later through Ripple's own announcement.
And that lack of initial transparency, that's caused some friction in the crypto community, right?
Oh yeah, definitely. Some people felt like they weren't given the full picture up front about Ripple's control over such a big chunk of the XRP supply.
Yeah.
And that raised concerns about possible market manipulation and whether the XRP ecosystem is truly decentralized.
It's a valid concern, especially in the crypto world where decentralization is such a core value.
Exactly. But, as we discussed earlier, Ripple has taken steps to address those concerns.
Right, like the escrow system and the regular reports they issue now.
Exactly. Setting up that escrow system in 2017 with those limits on monthly releases and the rule about unused tokens going back into escrow, that was a big move towards making things more predictable and reducing the chances of flooding the market with XRP all at once.
Makes sense.
And they started publishing those quarterly XRP markets reports too, which provide transparency into their XRP sales, what's happening with the escrow accounts, and how the XRP ledger is performing overall. So while they might not have been completely open about everything at the very beginning, they've definitely made efforts to be more transparent over time.
That's good to hear. So to sum up the key takeaways from the white paper in a simpler way, as Griffin does, what are the main things someone should remember?
Basically, the white paper presents XRP as this digital asset that's specifically designed for moving value between different currencies efficiently and cheaply. It really emphasizes that unique UNL consensus mechanism, which is much faster and uses way less energy than Bitcoin's mining process. The whole design is about fast transaction finality and being able to handle a huge volume of transactions. But as Griffin reiterates, that initial concentration of XRP ownership with Ripple Labs, that's still a big point of discussion when it comes to how decentralized XRP truly is.
Yeah, this seems to be a recurring theme.
It is.
Okay, so according to Frederick Griffin's analysis, what's driving all the excitement around XRP? What's got people so interested in it?
Well, Griffin says that a lot of the excitement comes from the fact that XRP is actually trying to work with the traditional banking and financial industry, not disrupt it completely. The potential for near-instant, low-cost cross-border transactions, that's a huge draw for these institutions. If they can clear up the legal and regulatory uncertainties and more people start using it, XRP could really become a key technology for global payments.
It's a pretty compelling vision.
It is. But of course, there are still some big challenges ahead.
Right, like we were talking about earlier, the competition, the decentralization debate, the concerns about how the tokens were initially distributed.
Exactly. Those are all hurdles that XRP will need to overcome. But as Griffin concludes, the combination of XRP's speed, its practical uses, and the fact that it's actively working with major financial players, that makes it a project worth watching as blockchain technology continues to evolve.
Absolutely. So to wrap up our deep dive today, we've explored how XRP is all about making cross-border payments easier for institutions. We looked at the unique technology behind it, especially that UNL consensus mechanism that's explained in detail in the white paper. We talked about who could benefit from it, and we also discussed some of the ongoing challenges and debates surrounding XRP. Hopefully, by digging into the why behind the excitement. Drawing on what Frederick Griffin had to say, you've got a clearer picture of where XRP fits into the world of digital assets. We've gone beyond just the surface level stuff and really looked at what's going on.
It's fascinating, isn't it, how technology, regulations, and actual adoption all play into this?
Yeah, it's complex for sure.
What parts of XRP's strategy do you think are most promising, and what potential obstacles do you see as the biggest in the long run?
That's a good question. And building on that, given how well Frederick Griffin explains these complicated ideas, like we saw in his book, how do you think XRP's current advantages in terms of technology and the partnerships they've formed, how do those position it for the future, especially as the global financial system keeps changing so rapidly? It's something to think about for sure. Thanks for joining us on The Deep Dive.